Hey guys, how are you? What next for silver and gold? What do we require for the great bull market to resume and strength to return? I'm going to be looking at gold and silver, and you're going to see what I anticipate could potentially happen next. Why, on balance of probabilities, we're probably looking for further upside, but there may still be chance for a little dip to the downside before marginal. Short time frame, medium time frame, a little bit of coming off first. In other words, limit orders may be the best tool for exploiting silver and gold. I'm going to get into the detail in this video. Please remember also, we appreciate likes and shares. Share immediately if you can through your social medias while they're still going fresh. If you like trading and you think our kind of community may work for you, there's a link below. Get started. Right. This isn't the gold chart. What are you looking at? In fact, you're looking at the dollar index. The US dollar index. It's very relevant. And I'm going to just go over what's kind of happened so far. So we never expected fireworks of strength to the upside, but we did at one point think that this blue area might be a short to maybe longer term low. That is coming under great stress as the dollar has been exceptionally weak. You may remember this falling wedge, the structure, the break over here, and you're moving up. That sets up a possible inverted head and shoulders to the upside, but that has failed to perform. That was invalidated after the sustained down leg over here. Let's draw. Let's show you what we've got. In the pink, we pull back. We had a small bounce. We came down. Now, this was at that time a possible right shoulder for the inverted head and shoulders, where the low was here on your head, and there was a left shoulder to the left of that. We'd talked about that possibility, and it looked like you'd broken quite strongly at this point here on what would have been the neckline over there, and you made some good progress towards the heading in the upside. But more recent history has shown that, in fact, the dollar is looking really weak. So we're talking dollar first before we get into the gold and silver specifics. Why? Because it's the other half of the trade, and we're being different. We're looking at it in first blush to get an understanding of what the fiats are doing, particularly the global world fiat. Yes. Okay, so a little bit of technical analysis. We'll drop a time frame to the 2 hourly. In fact, we'll go a little bit flatter. You see, you did in fact get a head and shoulder over here. We spotted that. We had a target down there on the downside, and it did in fact make it at that point. So there was, as I'm highlighting, left head and right shoulder, little head and shoulder reversal there. And it was a case of, all right, maybe we're just revisiting the neckline, which was here at 93.6. But in actual fact, you went into a rather weak channel here. We kept bumping into this key level of 93.9 just before the 94 level, key round number, and we couldn't make progress. So on the way down, we bounced twice there. This turned into resistance areas. Number of times, in fact, over here and here. All those places where I put across ended up being real resistance for us. So, hang on a minute. This is supposed to be in a reversal. It's making slow progress, and it's giving back. And it kept giving back. This was fairly strong to the upside. If I highlight this again, when we broke out of the original potential upside right shoulder, this was a good break that again respected this very valid 93.6 level, and it was looking fairly strong. From this head and shoulder over here, we've actually been consistently weak. We've been in a trend channel up until this point. Then it looked like, hold on a minute, we might be reversing out. No, we had a little bit of a grind line across there. We went into a real spill. We squeezed again, another chance at going upside. Couldn't manage much more than a channel where we once again kissed that key level that had shown itself to be key so many times before on the more recent history. And that was the end of that. Little bit of a rising wedge in that channel as you were along this basing ascending grind line. Spill, minor bounce down. That is another mini rising wedge with a spill down to the 92.7, which was significant earlier on. And this head and shoulder fractal that gave you the left shoulder here, the head there, and that final right there. Let's clear the face a little bit so you can see it more fully. There it is in the red. That was your neckline. You ended up making that target before once again you rallied. Rally, spit down again to this key level of significance. That was relevant very much strongly to the other side, sitting at the 92.7 round numbers, 93.6, 94s, and 94-200 up there. Lots of round numbers playing real roles here on the dollar index. So how does this dollar index look? For me, you're having a little bit of a snapback rally here, but this is not high conviction. It feels very much like what you got here, coming down quite hard in the down leg, meeting that key level, a smaller, weaker bounce. Overall, it wouldn't surprise me if by midweek we're trading lower on the dollar index again. This has proven very buoyant for Bitcoin. And not yet particularly so for silver and gold, but edging in that direction in my overall view. So let's go to the precious metals market and talk a little more about that. So our current bias is, yes, a little bit of pushback. Oh, there's one final point I do want to make as well. Whilst this is not a proper, full, possible head and shoulder, we are finding quite often in disproportionate. So good head and shoulder is a long-term bull channel, bull market that then has a head that is slightly higher than the previous first shoulder, but then comes down and is a cyclical reversal. That is the correct Dow theory. But occasionally you can have just a small move like this, and then you go very quickly into a head and shoulder, which actually captures the bulk of the move. This isn't really a big bull market, and most of it is made up of the head and shoulder. I typically refer to that as a fractal of head and shoulder rather than a full head and shoulder. This little fella actually qualifies as a reasonable head and shoulder because proportionately it had a significant move going upside before it was formed, and it doesn't make up 70% of that upside move. And then, apart from making target, it continued to the downside. So it showed itself to be more valuable. Why am I differentiating between a full head and shoulder and a fractal head and shoulder? Well, we've had a habit of the fractal still performing to downside targets. The last example being a very good target take there on the final last triggering event there, where you would have had a stop there, and you would have made a reasonable risk reward profile. You could have got in a little earlier on the takeout there, would have been more risk. But we're having a bigger possible one here, where once again, this is not a bull market per se, and the bulk of this upside move is made up with what we're referring to as a fractalized, you see the word fractal, the bottom part of it anyway, version of it here, with this being a possible head. And that key level potential neckline for this fractal, not this clean full trend head and shoulders, but a fractal thereof, is on these key break points. That was very close to breaking on the falling wedge. That was kissed and met. That would be your armpit, and you've made that level again over here. So if we get a bit more swinging, jerky up, jerky down, you may then qualify for a fractalized right shoulder where all this price behavior is a head. Once again, this is not what I would consider classically and acceptable definition for your proper full-blown trend reversal head and shoulder, but we are seeing these fractal versions being quite accurate and performing. So we're being practical about our technical analysis implementation rather than fully theoretical, and this could suggest of itself that you have a neckline here, and on that head could really point to some serious weakness. I wonder if those post-election blues and all that will go with the non-acceptance of the result, the rioting and everything else that will likely occur when yours truly, the troll in chief, gets his second term. I don't know. But that's what I would guess. Could of course be wrong on all levels, and we'll see in time, and we'll certainly own up to it if the case. So let's get into the gold and silver, having highlighted that. A little bit of an overhang of underlying bearishness while you might churn just above the 92.7 for a while. Good. let's look at God market gold, because that's why you're here. I'm going to clear the face a little bit first and go up a bit. You may recall we warned that there would be potential bearishness, and we drew a structure that was suggesting that. As yet, that structure has not performed to target, but you have sold off. So that was a short point, but it has not performed to target, and it is slowly running out of time, which shows the nature of the macro bull structure in gold, which has been super strong, although it met a very big target here, mainly on account of the gold euro and the gold pound key top calling targets, literally on the peaks. It was almost too good to be true. On the other two crosses, which was also the top for the dollar. As a result of that being a 7 3/4 year cycle that we were looking at, it led to this pause period. Now we've also drawn, and we'll go for our friend TG Pink there, falling wedge varieties as well as possible solutions. Let me just clear the face entirely before I draw the falling wedge, shall I? Options as well, which are classic ways of gestation. In other words, way the market can have a pullback against its macro bullish trend, but at the same time be winding up for future further upside. Typically, that's how you would draw it for your gold market. We put a splitter in there. As I've already highlighted in the red, we'd probably point out that there were grind lines where you broke down, and to some degree you have a threat there of here. You could even argue they've been broken through already, and we are doing what we think we call squaring up. We'll talk more about that in a minute. On this particular case, this pattern is running out of time to make a target which was just sub the 1800, which I suspect will see that pattern not perform, which is a feedback mechanism. In other words, yes, gold and silver needed to be weak. That's why we had the pattern set up, but it's not that weak that it's going to deliver you a performing downside target, because it's measured against the dollar, and the dollar itself has been weak. That means maybe if you'd measured it against a stronger fiat, you might have made it home, or against any other underlying that was a little bit firmer than the dollar. But in this case, you're measuring a resting gold against a weak dollar. So gold does not pull back quite as far, and that's the value of having a time stop. If you want to find out how we implement time stops and some of the further detail and learn the specifics of Hunt Volatility Funnel Method, please feel free to grab the link below, book a chat with one of our guys, and see if it'll be something of interest or value to you. So, carrying on with the analysis, in the case of this wedge, we have already, as you've noticed, broken out, but it hasn't done so with any gusto, which again highlights that probably gold is still a bit weak. It's only because of the weakness in the dollar as well that it's kind of squeezed its way out. In short, it didn't strike me as being particularly ready right that moment. And let's talk about this a little bit more, and for that we're going to drop the time frame down. So dropping the time frame down, remember this is our God market of precious metals, and he'll determine if the others run as well. We're all very keen and interested on silver, and it's highly dominant. Now, something I'm going to highlight to you is generally convexity, and you'll learn more about this on a program about convexity, which is the sort of rounding, doming effect. Let's try a better line. Let's see if I can do that a bit better. More like a semicircle like that. Is not a sign of strength. In other words, especially when you're coming into it with a down leg, what you typically might find is that you roll over, kind of like the dome of a church, and it rolls over. However, there is an exception for this. If we see, like our basing ascending grind line that we have, which is that straight line over there, the way you can deal with this and it actually reverts to a bullish, which is our primary scenario at the moment, is you break through that ascending gradient along the lows, but you don't do it with any great gusto. You start to do what we call squaring up. That means you're responding now to key levels of significance anymore. You've gone convex, you were going up, you slowed down, but you're not going down the other side of the half circle like the dome. You've now reached a ledge and a resistance. What would we suggest those levels are? Well, it's quite interesting. You've got the key level of significance, that is the 1900 mark, which is roughly right there. This is fascinating, and I'm going to give you a little flash of some of the eyeline level items that we have on this. You will see there is the previous high as well. That is the 2011 previous high, which is 1923.7 on that dark blue line. So if you go all the way back to 2011, the highest point. Now, this has been a classic support and resistance trader's trap. You took out the previous high of 2011, and what ended up happening, that was 1923.7. You ran to 2007, everyone would have got heavily long, and then you got smacked back down below, and many of the support and resistance traders that waited for confirmation, waited to see if the bull was a real bull, watched it climb, and only after it took out the previous high, went for a complete round trip that ended up smashing them back down below their level. Many might have got stopped out. Then you had a wind up and you had a deeper smash down, which would have shaken out a lot of the support and resistance buyers at the takeout of the 2011 high, again suffering a deeper red event over here. So those weekends would have potentially been shaken out indeed. But what's actually happening now is that you ran the previous high by a little bit. So we're focusing here, dump, and then you did a minor little tick through there, and you're also just floating below the 1900 round level. Those are just wicks, little mini spikes. And in actual fact, your midpoint, wait for it, 1911 is halfway in between that, and now you are trapped in what we refer to as a bit of a stall box, and you are going to tighten, we expect, there around. So that's your stall box now. So you've gone from being that convex rolling over banana, that's the first half of the dome. You're not rolling down the other side. In our estimation, it already shows that it's squared up too much. It's showing that the 1900 level that I've done in dark red there is probably serving as support, often just run on a wick and then being bought up. That means buyers are happy. These same buyers that were coming up here, let's do it in bright blue, that were coming up here and double bottomed you out there, kept coming up with the gradient, kept coming up under the market with the gradient, and are now happy to be limit buyers at any point just below 1900. 1899, 1897, 1898, all day long, they will accumulate. And the previous high, the resistance guys, they got a bit shaken out. There's maybe some distribution. It's come down, and that selling, we should do it in a different color, I suppose. That selling is happy to come in over here in and around the tops of this box as well. There's been a little bit of nipping along that little top there and again across there. But at some point, one of these horizontal levels will win out. There's two scenarios. One, I've drawn this wedge incorrectly, and you see in pink there, I've moved it a bit away from that, and I've tried to incorporate this within the wedge. I don't actually think that's the correct draw. I think you should be taking the next localized high. In short, I think that pink line, we don't want to move too far away. I'm going to have to say goodbye to those beautiful Picasso-like drawings. I think that pink line is got to go up, got to go up, got to go up. Yeah. Don't you hate it when it's too tight and there's no space to move? Got to get the bottom of that line. I think in actual fact that this pink line should be going through that high over there, which means you've probably traded out through your wedge already. You've probably traded out through your wedge, and this is part of the squaring up process. Okay. You should capture that top. Now, there are two things that could indeed happen where I get to be wrong. So always ask the question, how do we be wrong here? It's something that happens quite regularly, so understand it. We're highlighting that the time frame for this downside move expectancy is not yet there, but it's reaching the end of its tether. So how do we be wrong? Well, the way which we be wrong is there is one final dip move to the downside that takes out this basing ascending grind level a little more aggressively. So instead of holding the support here that's tucked in under just under the 1900 level, and on the other side of the 1923.7, which is that previous 21 high, where you're essentially stalling along there, you could have one stab down that brings you back into the wedge, which would support the case for the slightly higher draw of the wedge that just clipped this high and was a little bit away from that high. But this is degrees. Which is the right line for your falling wedge? I think it should interact with this big sell-off over here, which is why I say we've probably already squeezed out. So lots of funny lines there, looking confusing, but you could have, and that's how we'll be wrong, you could have another visit down and then that could double bottom. It might make a marginally lower low or actually bottom out a little higher. We do like to see 3 full impulses in our wedge in much the same way we like to see on hunt volatility funnels. And if you want to, as I say, you can find out how to choose good high quality funnels through a program with us and trade your way with a community, with feedback and learning to the wealth that you deserve and need for these reset times. But that could qualify enough of a third impulse with the basing ascending grind line, but generally you tend to have a little bit of a down leg. So maybe this box where you stall for a while will see time pass by, no further upside, maybe a little bit of squeezing and tightening up, and this just sets up the scenario of eventual upside move. So I think that's probably what's going to happen, but there is the risk that you have one more push to the downside. If you're uncertain and you think there's going to be another push to the downside, feel free to put limit orders in the following range. Round about here. You can see from this that I'm highlighting the 1855 to the 1890 range. For me personally, I think you're going to need to be in the 1890 to the just sub 1900 range to be sure of getting an entry, because you might not get that down leg. And I would say we probably square up. What typically happens after a falling wedge? Well, it's not as reliable as an HVF, but it's still interesting, and we're in a macro bull. What typically happens is you do get a bump, a proper bump, and as yet that hasn't happened. You've had a kind of walking your way out of the wedge experience rather than a major impulsive move. So if that's our wedge draw, we'll put him in one more time. If that's our wedge draw, you're walking your way out. It's kind of had a number of moves with a little bit of a return. Eventually you get something a bit more impulsive that will take you on an upside journey. Will we run the other high from that straight away, or will we have a rest and pull back down and make a big continuation pattern? Remains to be seen. So you might make it up to these levels and run into some resistance in and around 2050, in which case you're likely to have a down leg at some point, or there'll be real breakout news, which could be stimulus just before election, just post election, whatever the system controllers decide, and that could be very useful and very beneficial. So where does silver come into all of this? Let's cover this. So for me, silver is slightly prettier than gold in terms of this part of the price action. The wedge was more clearly defined in the gold than it has been in the silver, but that's fine. We look at gold as our god market for precious metals. If we're going to break the wedge on gold to the upside, then it's quite likely silver will follow. And more importantly, silver may indeed overperform as we expect. And more on that in a minute. So I quite like this overall pattern. There is a scope that it hangs a little heavier and pushes a little lower, but without running that low. So limit orders again might get you in If you're aggressive, a little lower here around the 24. The big mark, the marks that are of great interest here are your 24 price in terms of this construct to this point, and your 25.5, and your, my apologies, even your 26. Yeah, 25.5. And you're all pivoting around very, very close to, it's a little bit high slung, the 25 mark. So you've got 24, 24.5, 25, 25.5. The 25.5 is being well resisted with just one little short stab through there and resistance there. So I think this is going to be a wind up to take you through the 25.5. Bit of compression, bit of calming, bit of low volatility, kind of like that, but instead of being a bearish break, we may get an impulsive move in that direction, which would be supported by gold as the lead steer. So that's the potential for your precious metals, guys. I think you could be rewarded with potential buy limit orders. This, let me be clear, I could be totally wrong for this, and we always discuss how do we be wrong, but I would think limit buy orders in this price range could bear fruit at a later point if we are to get the squeeze that we expect. I would expect the resolution to be upside, but if we're wrong, we're 180 degrees wrong, which means we might be having a deeper move to finish a third impulse as I described for gold. If gold has a third with a stronger down leg for its third impulse inside that wedge, silver will too. And as a higher beta, it'll be wrong. So stop placements can be quite clearly set there. If we run that, if that will certainly not be a squeezy Japanesey structure as I've drawn. So that's your point of disqualification. Remember, if you've bought somewhere in here, the distance isn't excessive for your stop loss. However, the benefit could be quite substantial. You should be back in and around these ranges where you were congesting prior to the fall, which would give you a better move. Plus, you could make new highs subsequent to that. You could have a little bit of a rest at that point, but you should be well in the green. Okay, so that was the Market Sniper, just giving you a little bit of a heads up. Looks like it could be, look, we're Friday now. The markets are going to close soon. This isn't going to be something that's going to happen on Friday evening. I'm getting this out to you so that you have an opportunity potentially to put in nibble just below the market orders. Remember, 3 key things you should never do. Do not habitually enter the market on market orders. In fact, I would say virtually try avoid ever doing it. Sometimes it's a teensy bit hard, but rarely is now the moment. Teach yourself, I don't want to do market orders. Always know your risk reward first. Some people aren't sure how to use the risk reward. It's quite an easy function on TradingView. This would be a long trade. So your entries long, if I just took a midpoint there, would be somewhere in there. And then your stop would be quite clearly just there, the takeout of the low, and I'm arguing that you should be able to see moves up to beyond the 28s as part of that. That will give you a moderate risk reward. I wouldn't say extreme satisfactory, but I wouldn't necessarily close the whole trade at the high point. I might do partial close and look to see if we're getting further upside on a part of the trade. Also, as a macro bull, I feel more comfortable positioning long again, much like how we were on Bitcoin and crypto. It's harder to get shorts right on cryptos in a bull market. Generally, I don't overdo that, but sometimes it feels like they need a rest. Similarly here, gold and silver needed to have a rest, but I don't think gold's going to be making its downside target. So this is typical of counter trend trading. You do not get the performance you want. So overall, not shorting things that you are macro bullish is a pretty good idea. Being square or bull on macro bulls is the game to play. And with the dollar being so weak and still looking, as we started, to be further weak, I think this could be an interesting bias for you going into Monday, getting maybe filled Monday, Tuesday, and possibly the break and moving Tuesday or Wednesday, or even late Monday. Timing is sometimes a little difficult to get exactly right, and it's also news dependent. So have a look at Forex Factory. See if there's any major announcements intended by the Fed or anybody else. Of course, there could be announcements out of the blue from Trump, Pelosi, Axis, ref stimulus, and that too could lead to other things. Other anti-fiats could be watched, like Bitcoin, which has been strong and has been moving up and is also, in my view, in a form of possible continuation pattern. If that breaks to the upside, that's a further little straw in your favor for the bullish argument on precious metals. Okay, I'm Francis Hunt, the Crypto Sniper, the Market Sniper. Grab the links below, free materials and book a call. Get started, talk to someone who's not a salesman but a trader like you to see and find out details on how you can learn Hunt Volatility Funnel Method. Thanks for sharing. We appreciate that. That's our highest currency. No ads on the channel. Love you lots. Enjoy your weekend. Bye for now.